Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic is called the $1,000 penny, right? I'm sure that you guys are like, what does that even mean, a $1,000 penny? Well, we're going to talk about it today, where pennies matter in trading, okay? So sometimes you miss a target by a penny, sometimes it holds your stop loss by a penny, but this is just part of the statistical process of trading. And I know it can be unbelievably, amazingly, incredibly frustrating when this happens to you, especially if you get stopped out by a penny and then it rips higher and hits your target. So we're going to talk a little bit about how much pennies matter and what you can also do about it, as well as just understanding the statistical significance, right? You have to realize that you cannot measure your trades over one day or 1 week or even 1 month. You need to measure them over quarters or years, because that's statistically relevant. Over a week or even a month, crazy things can happen. It's like flipping a coin sometimes. You can get 8 heads in a row. While it's statistically unlikely, it does happen. Same in trading. You can have 5, 10 trade losing streaks sometimes, especially depending upon your management. You might even have longer losing streaks, again, depending upon your management, if you're like a home run type trader. So you have to understand what your trading plan is, what your edge is, as well as what your management is likely to produce. A lot of people don't understand, like, well, I'm going to do 2 RL or nothing, or 5 RL or nothing. And they don't realize the difference. For example, if you do 5 RL or nothing, there's a very good chance you will have 10, 12, 15 trade losing streaks sometime throughout the year. Okay, it may not happen often, but you will statistically have at least 1 or 2 of those streaks throughout the year. Well, if you don't recognize or understand that you're going to have a 10, 12, 15 trade losing streak, if you're using that type of management, then guess what? You're going to have a hard time following that management, because when you're on that losing streak, you're going to think something's really wrong. No, that's just part of the statistical process to get you to the goal. Now, if you're doing 1 RL or nothing, that should never happen. But if you don't know the difference, you'll be very frustrated and you won't act accordingly when it happens. So understanding your system is very important. So we're going to talk about the $1,000 penny today, and we're also going to talk about kind of that mental approach you need, basically to understand what your process, what your system, what your expectations should be depending upon your management. All right, so I am Jared Wesley of Live Traders. If you like these videos, please click the like button, hammer that subscribe button. Let's get to it. This week's lecture topic is called the $1,000 penny. Some of you might know what this means. Some of you may not know what this means. But pennies matter in trading, and sometimes pennies can be extremely expensive. So I kind of have a twofold topic today, right? So we're going to talk about pennies and how they mess with you psychologically, and how they can be very, very expensive. Sometimes they save you money, sometimes they cost you money. We're also going to talk about patterns that fail sometimes that maybe shouldn't fail, meaning this lecture is meant or intended to keep you guys on the straight and narrow. It's intended to help you understand what your expectancy is, and what's not your expectancy, but what's also expected of you. Okay? See, a lot of people will come into this business and they don't understand anything about their trading. So, for example, if you're, I don't know, a 5 RL or nothing trader, well, there are certain things that come with being a 5 RL or nothing trader. And what I mean by certain things is you may have losing streaks that are double digits, 10 trade losing streaks, right? 15 trade losing streaks. That's what comes with 5 RL or nothing. And if you don't understand that, guess what's going to happen? You're going to be on your 6th, 7th, 8th losing trade, and you're going to give up and you're going to break your plan. But you're not understanding that your plan, that's expected. That's a part of your expectancy in that type of a plan. If you're a scalp trader with 1R targets, well, then it's a little bit different, isn't it? You're not likely going to expect to lose 10 trades in a row. So if you don't understand those things, it's going to be a problem for you, all right? But before we get into that, all right, we must first do, when will the insanity stop, right? When will the insanity stop? This one is I don't know, it's less egregious than some of the ones you're used to seeing, right? Recently, you guys saw one where somebody lost $400,000. They didn't tell their husband. Last week, we saw somebody lose $450,000. This one, you're like, oh, I lost 10 grand. I'm not interested, Jared. I don't care. That's not really the point of this one, though. The point of this one is have a plan, right? So you have a person who says they're relatively younger in the market. Okay, I bought the dip on Tesla, Upstart, Google, Neo, which caused further losses. I even bought some crypto, but I was able to recover my loss. And then it says this, Bitcoin, when I bought some Bitcoin when it was at 33,000, sold it at 40,000. The only smart thing I did. Why was that smart? Is it smart because you made money? Can you guys understand the separation between doing the right thing and making money? They are different, trust me. They are completely different things, okay? There are plenty of times where people do absolutely ridiculously stupid shit, and they make money doing it. There are plenty of times people make really good decisions and don't get paid for it. Okay, so it's one of those things that just because this person saw Bitcoin go from 33 to 45 and made 40%, that doesn't mean it was a smart thing. You're just gambling. This is a pure gambler, this person, okay? And then he says, I made a big mistake. I know. Problem is, what should I do now? I still have another 20,000 in the market, around 10,000 in index funds mentioned, the rest in stocks, got 3 in Tesla, 3 in Upstart, and the rest in Google. Well, the first thing is, what are you doing asking the internet? The heck's the matter with you? Reddit? Wall Street bets? Are you kidding me? Really? That's where you're going to go for your stock market advice? I don't think so. That's not a terribly good idea. The smartest thing that this person did was take VOO and the Qs, right? I mean, take a total market fund and set it and forget it. You're young. Don't worry about it. But the general point of this when will the insanity stop slide is not about the 10,000 this person lost. It's about not having a plan. Right? There is no plan for this person. They're just, throwing spaghetti at the wall and hoping it sticks. That's not a plan, right? It's not a plan, okay? So you need to understand your plan. Why? Because if the expectation is long-term investing and you're worried about Tesla after a month, or you're worried about Google or Neo after 3 months, you have a problem. Your mental approach is not the same as the reality. Right? There's a disconnect there. What you say you want and what you're doing are two different things. Okay? What you say you want and what you're doing are two different things. Okay? So it's one of those things that's just, you have to have a trading plan. Period. End of discussion. If you don't, you're not going anywhere. Period. All right? So let's dig in. Good trading versus bad trading. Okay? Good trading versus bad trading. What does bad trading look like? Well, randomly changing trade management because of 1 day or 1 week or 1 month's results, right? Just randomly doing something because you had a tough week or a tough month. Tell me you haven't done this before. You know you have. You're lying to me. You know you've done it before, okay? Not having a pre-trade checklist. Why is that important? Because your plan says this is what you're supposed to be trading. And then you go off and trade something else because you don't have a piece of paper in front of you holding you accountable to it, right? You're just like, well, it kind of looks like what I want to trade. Well, is it or isn't it? I don't want a kind of maybe looks like what you want to trade. I want to know, is it or isn't it? Okay? Risking too much money too soon. This is the vast majority of people that are in when will the insanity stop. Trading is the hardest business you will ever try in your life. It is the hardest thing you will ever try in your life. Okay? And you're going to come in with no experience, no background, no nothing. And you're going to throw thousands, tens of thousands, hundreds of thousands of dollars into the market and have no idea what you're doing with no plan, no checklist, nothing. Do you realize how stupid that sounds? Yes, you do, but you can't help yourself. See, if someone else told you that, and that's what they were doing, you would look at them cross-eyed and go, what the heck's the matter with you? What is wrong with you? But when you do it, it's okay. It's kind of like rules for thee, but not for me. You remember those rules, eating at restaurants when you weren't supposed to, Gavin. You all know what I'm talking about. The point I'm making is this is what traders do all the time. They'll tell other people, they'll give good, sound advice to others, but will not use the same advice for themselves. Okay? Not taking stop losses. This is nasty because, yeah, you'll get away with it a few times and the stock will bounce back up and maybe hit your target. Okay? But ultimately, one or two of these will never come back and you will be a bag holder and potentially blow up your account, go below the PDT rule. Terrible things that you don't want to do, okay? You continue doing the same wrong things over and over again. Everybody ever have this one? I used to have this one. You know, you'd sit there and you had a bad week or a tough week and you're upset and you're like, you know what? I'm going to go review my trades. And you go review your trades Friday afternoon, Saturday morning, whatever, and you're like, you know what, I wasn't very good last week. I'm not going to do that again. I promise I'm not going to do that again. Monday morning rolls around and 10 minutes into the market open, you are back doing the same crap that you said you weren't going to do Friday afternoon or Saturday morning. You're like, yeah, but this time it's different. And then the next week goes past. You're like, no, but this time it's really different. And then the next week passes, but this time it's really, really different. Nothing's changed. Nothing's changed because you don't have anything to keep you from changing. Meaning you don't have a consequence system. You don't have an accountability partner. You don't have a trading buddy. There's nothing. There's no real reason for you to change. You will only change when the pain to stay the same becomes greater than the pain to change. You're not there yet. But what good trading looks like is the antithesis of bad trading, right? Specific and detailed plan. Pre-trade checklist, and you follow it and use it. If you don't get through the checklist, you don't take the trade. End of discussion. Yeah, you're going to miss a few trades once in a while. Oh well, get better at your checklist. But until you go through the checklist, you don't take the trade. Proper money management. Start small and work your way up. You start with $5. Why? Because you can't hurt yourself with $5. Most people don't. They start with $500 or $5,000. I'm talking risk, not the size of your trading account. I'm not talking about the size of your trading account. I am talking about money management right now. I'm talking about losing a trade, losing $5. A lot of you out there, you're losing a trade and you're losing $5,000, $50,000 because you don't take a stop loss. Consistent trade management. You come in, you do the same thing on every trade, right? You have an approach and you follow that approach. Guys, the edge in this business is really small. It is. I know people want you to think, oh, you know, I learned from so-and-so. The edge is still very small. You don't have a big edge. So by not being consistent, you're messing with the very small edge you already have. And then that little bit of an edge, by not being consistent, can turn you into a break-even or a losing trader because of it. Something so small, which we're going to talk about today, pennies. Okay? Take your stop losses without question. You don't even question it. This is the threshold. This is where I set it before the trade. If it hits it, I'm done. I'm out. Too many people are like, oh, I'll give it an extra nickel. I'll give it an extra dime. I'll give it an extra dollar. It's got to bounce at some point. No, it doesn't. Have you seen the markets lately? I mean, we had nearly a 4 or 5% down day a week or two ago. 5% down day in the markets. So don't tell me it has to bounce just because you think it should. It doesn't. The market doesn't care about you, okay? You correct your mistakes using statistics and consequences. This was my biggest problem. I had the statistics. I knew what needed to be done. I just wasn't doing it. Okay? And why? I did not have a consequence system to keep me on the straight and narrow. Plain and simple. I just didn't. Okay? So yeah, despite all of this, sometimes the market is just better than you are. This is where objectivity comes into play. So despite doing all of these good trader things, sometimes the market just gets you by the short hairs, man, and mentally messes with you, right? So we're going to take a look at that. This is some of my trading from last week, okay? So I took some trades last week. I take trades every week. But my point is, there were a few trades last week, 4 to be specific, that completely changed my entire week. And we're going to go over those 4 trades. Then we're going to go over 3 other trades, okay? Some that were today, some that were yesterday, et cetera, and so forth. And we're going to talk a little bit about the overall, not just the process of good trading, but we're going to talk about sometimes you can trade well and not get paid for it. So let's take a look, all right? So this is a trade that I took on Nike last week, okay? And we're not going to sit here and look at the daily in the market. We did that a couple weeks ago with relative strength. Most of these are pretty decent trades. Not perfect, but pretty darn good, okay? So when I look at this, I see Nike gapping up over resistance, puts in a wide range green bar, about a $1 green bar, okay? And then a narrow range resting bar. Now, in fairness, this isn't really a true 3-bar play because bar number 2 actually went down about 60%. Okay, so the bottom of bar number 2 is actually 110.34, right? So I called this trade at 111 and I took it at 111 and the stop loss was 110.20. And this is important. This is important. Why is it important? Because the bottom of this tail was 110.34. I gave it 14 cents. I didn't hug up to this bar, right? I gave it room, okay? I gave it 14 cents of extra flexibility, all right? Just in case. Well, what happened? The stock pops up, goes about 30, 40 cents, half of an hour, whatever, and then pulls all the way back to here. But take a look at this. It dropped to 110.19 and stopped me out. My shares were at 110.20. Do you know how effing annoying it is to be stopped out on the penny, watch a trade rip right back up immediately, chop around, then go to your target? It's annoying. It's beyond annoying. It's one of the most frustrating things that can happen, especially because I gave it 14 cents. Should have given it 15 or 16 cents, but you don't know that, right? So I got right back in it on an 84% play. I got right back in it at 111. Okay, I used the same stop. It popped up, chopped around, didn't look good for a while, right? Notice right here, it didn't look very good for a while, but it ultimately worked. Okay, so my point was that 1 penny was a $1,500 penny. Now you're asking, well, what is a $1,500 penny? Well, the first trade stopped out. I lost $1,500 on the first trade by 1 penny. I lost $1,500. I did get back in it, and I made $3,000 on the second trade. So I did net $1,500. I did make money. But if the first trade didn't stop me out, I would have made $3,000. You see where I'm going with this? So the bottom of bar 2 is 110.34. I gave it 14 extra cents, but it went 15 cents, stopped me out. Yes, got back in, made an R versus losing an R. But if it had held by 1 penny, I would have made 2R instead of 1. And that's $1,500 all over 1 penny. What can you do about this? Nothing. There's nothing you can do about this. You say, well, put it under the low of the day. I'm going to show you later, I did that on a trade too. Sometimes the market just gets you. So there was really nothing wrong with this trade. It was a good trade. And the 84% play saved my bacon, but a penny still costs $1,500. How about this trade? This one, this was annoying. All right, DG was a huge gap up. This picture was taken on a different day. That's why you're seeing two different. See the top of the screen where it says it's up 2%, and over here you're saying it's down 3%. These pictures were taken on a different day. This stock was up a lot. You can see the gap. It went from 195 to 225, almost 230. The gap on this thing was like 10 or 15%. It was massive, right? It was a fadeable type of gap. So I missed the first entry, which was the best entry, right? The first entry was right here. In fact, if I make a little picture of this, the best entry on this was really right about there, right? That was the entry I should have taken right here, right around 222. But I didn't see it. I missed it, so it's gone. So we're not looking at that right now. So the point is I didn't get the best entry, but then you get this 1 minute consolidation right at 220. The stop is 222 above that little 1 minute pivot. So it's a $2 stop loss. Okay, so I got filled at $220.03. I got a really good fill on this. I got filled better instead of worse, which is rare. All right, my target was $216.03. That's $4, right? It's a $2 stop loss, and I have a $4 target. All right, the goal was to make $3,000 on this. DG went to $216.06, then trailed out at break even. I missed a $4 target by 3 pennies. $4 target by 3 pennies. So I was up, do the math on this. You're looking at 750 shares. Let's do the math. So you're up $3.97 times 750. I was up $2,977.50. $2,977.50 out of 3,000. Right? You divide that by 3,000, you're at 99.25% of your target. 99.25% of your target. And what happens? That was the low of the day. Came all the way back, trailed out at break even. Now, the good news is it would have stopped out, right? If I didn't have a break even stop, it would have stopped out. But 3 pennies, 3 cents, cost $3,000. And I know it's some of you new traders, novice traders out there, because you guys are geniuses. You haven't, the experienced traders have never thought of this. Why didn't you just take it? Why don't you just take it at 216.06 or 216.10 or 216.20? Have you ever traded a $200 stock before? Have you seen the spread on them? They'll go down there and bounce back up in 3 seconds and you'll be 50 cents different. And how do you know after it does that it's not going to bounce up 50 cents then come back down to your target? It's not like Bank of America where it sits there 1 penny for like 2 minutes. It doesn't work like that. All right, so it comes all the way down to 216.06 and immediately pops back up. And then see the little bottoming tail? You're like, oh, it's going to come back down. I'm good. It's going to come back down. And then it doesn't. And the plan is 2 to 1. You're not taking 1.7 to 1. Why? Because if you do that, what's going to stop you next time from taking 1.6 to 1 or 1.5 to 1 or 1.2 to 1? That's your problem, and you know it. You see, you're a genius right now because you're like, Jared, you should have just taken it. No, it happened too fast. And if you're not staring at it, you're not going to see it anyway. And why would you be staring at it? Because if you're staring at this trade, you're not looking for other trades. You're not being productive. Okay? So I set my bracket order on this. And you look and you're like, oh, shit. Missed by 3 cents. Stopped me out of break even. $3,000. Okay? Next trade. Damn pennies, man. Right? These pennies. Do you guys see this right here? This is a nice 3-bar play. 5-minute 3-bar play. The entry was $98.25. The high of bar number 2. The high of bar number 2 is $98.77. I gave it 3 pennies. That's not a lot, but I gave it 3 pennies. What happened? It triggered us in by 4 cents. Stopped me out by a penny. It literally went to 98.81. I'm like, shit. Well, why didn't you give it 5 cents? Why didn't you give it 7 cents? Why didn't you give it 12 cents? You don't know, right? You don't know. So gave the trade 3 extra cents. It triggered me in, okay, stopped me out by a penny, by 1 penny, and then dropped and went to target. Now, the positive, I got back in. On the 84% play, I got back in. Okay? Got back in. So I did make 3,000 on the winner, but note, look at the red or the pink circle. I lost $1,583.86 on the first trade. So when I made the $3,000, I only netted $1,400 or $1,500. I should have netted 3,000, all over 1 penny. And again, I didn't hug on up to it. I did give it 3 cents, not a huge amount of room, but 3 cents. Sometimes you're the pigeon, and sometimes you're the statue, man. This is in the same week. 1 penny on one trade, $1,500. 3 pennies on another trade, $3,000. 1 penny on this trade, $1,500. You can't make this stuff up. Give it more room, give it less room. Sometimes the market gets you by the short hairs. And it did eventually go to target. So thankfully, right? Thankfully, this ultimately did work. And I did make $1,500. Still cost me $1,500. This one's a little bit different because it wasn't quite as egregious, right? It wasn't quite as egregious. Here's one where 30 cents cost $3,000. Okay, so this is a trade on Costco, again, that had a nice 3-bar play. It pops up, tanks, and shakes. It almost stopped us out. So here's one of those tweeners. This is one where literally our stop held by 7 cents. I think this went down to 426.06. I think that's what it was. My stop loss was 425.99, right about there. So this thing popped, shook out, and then ripped, right? It went 1.2R. It went like a, I don't know, $2.40 or something like that, okay? And then stops me out at break even. I move my stop loss to break even after they go 1R. After they move 1R, I go to break even. What happens? Goes just below 30 cents below break even, right? Goes 30 cents below break even, then hits the target at 432, chops around, and ultimately, eventually, this went 5R. It did. Eventually, this thing went to like 438 or something, 437 or something like that. The point, though, is that you can see how choppy and volatile stocks and the market can be. This one saved me from stopping out by 6 or 7 cents, would have been a full loss. But then the same thing that saved me hurt me up here. And there's not a lot you can do about this. Right now, in this case, maybe you could have given it a $4 stop loss, and yes, it would have ultimately worked, but that would have been challenging for the risk to reward on this. So came 10 cents from stopping out, then popped 1.2R, then went 30 cents below break even before hitting the 2R target 6 minutes later. Guys, this is what volatility looks like, especially on $200, $300, $400 stocks. This is why trading in this recent market has been a challenge, because we're seeing ranges that we have not seen since 2008, 2009. Right? We're seeing ranges where the market literally moves up $5, $7, 2%, 1%, 3%. Guys, a 1% market gap before COVID was a big gap. Since COVID, it's called a daily gap. Let me repeat that because you need to process this. Before COVID, a 1% gap in the market was a big deal. Since COVID, it's every day. Every day the market moves up 1%, 2%, 3%. Every day. We are in crazy volatile times right now. Okay? So I don't know when they'll stop, probably not for a while, but we need to figure out how to trade in this environment. But there are times when you trade well and you do not get paid, and that's what we're going to see here. 5 cents over 3 trades cost $6,000. 1 penny, 1 penny, 3 pennies. 5 cents over 3 trades was worth $6,000. $6,000 over a nickel. 35 cents over 4 trades, 1 cent, 1 cent, 3 cents, 30 cents, was worth $9,000. How much money did I make last week? I made $578. It was a shitty week. 35 cents different would have made me $9,578. Now think about that. They were not bad trades. Every one of them was a quality trade. A trade that I would likely take again. But my specific type of management didn't get it done. It wasn't because they were bad trades. It was just the style or type of my management. Now, why am I mentioning this to you? Because I'm going to go back here for a second, and I'm going to show you this from earlier. Do you remember randomly changing trade management because of 1 day or 1 week or 1 month? This is what new traders do. This is what bad trading looks like. So they have 1 week where it's like the market screwed you 3 or 4 times by a couple pennies. And you're like, well, I'm not going to let that happen again. So then you change something. Well, if it's 3 months, that's different. But 1 week? You're going to literally go rewrite your trading plan over a 1 week and 4 or 5 bad trades that just gotcha? No, that's what novice traders do. That's what bad traders do. Those pennies cost me $9,000. There's nothing you could do about it. That's called trading. Oh, well, trading is literally a game of pennies sometimes. Good trades stop out, bad trades work. We aren't interested in 1 trade or 1 week or even 1 month. Okay? We're interested in 1 year's worth of statistics because that is a meaningful sample size. Last week's results prove that you can trade well and still not get paid for it. Oh, well, have you ever been not a professional per se, but have you ever been an athlete and actually played well and somebody still beat you? Yes, it happens. You can go shoot 55% in basketball and the other team might shoot 58% or 60% and just beat you. You might have a really good trading day. Or not trading day. You might have a really good day in something and someone beats you. Ever watch a tennis match? We were just talking about Djokovic and Nadal. Great match. Both guys actually played very well. One just played better. That's all. Sometimes you trade very well. Okay? And the market's just better. That happens. Right? Sometimes the market is just better. You have to get that into your mind. Sometimes the market is just better. Sometimes your plan isn't right for that day. Maybe you took good trades, and maybe had you done all or nothing, you would have made $5,000. But you moved your stop and you made $200. But next time it's the opposite. The all or nothing trader doesn't make the money, and you do. It's a give and take, guys. This is why 1 week or 1 month is not a large enough sample size. Stop looking to jump off a bridge over 1 or 2 weeks of trading that doesn't work out. Now, I'm not saying don't go back and look at your trades. I'm not saying don't go back and review them and have consequences for poor trading. It's not what I'm saying. I'm saying once in a while, you will go back and you will look at your week and your month and go, I traded all right. Sure, I made a couple mistakes. We all do. But overall, I actually traded well. Didn't get paid for it. It's going to happen, guys. It's not maybe. It's a 100% chance this will happen in your trading career. So, now how about the flip side? How about the flip side? Sometimes you just can't win. Right? This one's a doozy, right? It's a bit of a doozy. Due to the recent experience from the previous week, so this is yesterday, so this is me saying, hey, I'm going to make a small change, not a huge trading plan change, but instead of using the high of bar number 2 on the 3-bar play, I'm going to use the high of the day. I don't want to get shaken out. It happened twice last week, MDT, DG, whatever, all right? I don't want that to happen. I'm going to use high of the day. I'm going to give it more room. Now look at this shit show. Watch this one. So due to the recent experience from the previous week of getting tagged by 1 to 3 cents, I chose to use a much wider stop on SIGA, S-I-G-A. The proper 3-bar play stop was 1173. That's the high of bar number 2 is 1170. It's 23 cents. Okay, technically 20 because I got filled really good on this at 1153. I decided to use $12 or 50 cents. Okay? All right. You're making a small adjustment because of the environment. Environmental change, small adjustment, giving it a little more room. Not a huge deal. Should save you. At first glance, this appears to be smart. As the stock drops 29 cents, right? It did. It dropped to $11.21, 29 cents. And then what happens? Pops back up. All right? And you're like, whew. This is exactly why I did it. This is exactly why I did it, right? Because notice, it goes to 1176. The top of this green bar topping tail is 1176. You're like, whew, see that? It worked. I would have stopped out by 1 penny. I would have put my stop at 1175, 2 pennies above, and this damn thing would have taken to 1176. And good idea, Jared. You got the market this time. Stock goes all the way down exactly to 1R. For me, exactly to 1R, right? Then the stock comes back down to 1103, which thankfully for me was break even due to an advantageous fill. And this allowed me to move my stop to break even. And then it comes back up, stops me at break even, chops around, would have been a full stop. So you're sitting there going, okay, Jared. But then you realize it didn't matter. It didn't matter. Okay, the point here is management's everything. Both stop losses, small or large, trail down at break even. But if you used all or nothing on the first trade with the 84% play, you would have made 1R. If you used all or nothing on the second trade, you would have lost 1R. Right? Meaning the wider stop. When I say second trade, I mean wider stop trade. Okay? So if you use the tight stop, 23 cents, what happened? It dropped 29 cents. You would have been break even. If you use the wider stop, it dropped 50 cents. You would have been break even. So it's the same, exactly the same. Wide stop, tight stop, same. If you used all or nothing on the tight stop, you would have stopped out on trade number 1, but you would have hit 2R on the 84% play, so you would have made some money. If you did all or nothing on the wide stop, you would have stopped out. You're like, Jared, what is the damn point here, man? I'm confused. Exactly. That's the whole point. You could have done a myriad of different things on this trade, and it wouldn't have mattered. Sometimes the market just gets you, is the point of this slide. Sometimes you just can't win. You take a good trade, tight stop, can't win. Wide stop, can't win. All or nothing, can't win. Raise your stop, lower your stop, can't win. Sometimes, no matter what you do, no matter what your management is, the market's going to get you. And when you're on a winning streak, no matter how bad of a play you take, it works anyway. We've all been there too. Have a 5-10 trade winning streak. You can do no wrong. You've seen it in basketball. People are double team, triple teams. They heave a ball up, it goes down anyway. Sometimes you just have the hot hand. Sometimes you don't. And this doesn't mean this was a bad trade. This was an excellent trade, right? This was a very good trade. What about today on BA? This was a good trade. Nothing really wrong with this. It was early. Didn't matter what stop loss we used. It didn't matter if we used below this bar. It didn't matter if we used 132.50, which is what I used. Didn't matter if I used low of the day. Didn't matter if I used low of this pivot. Didn't matter if I doubled the stop loss. It doesn't matter. Sometimes it doesn't matter. This is a good 3-bar play. Bottoming tail on the first bar, upper 50% on the second bar, relatively equal highs, near at a whole number, good gap. It's not shown, good gap. There's nothing wrong with this trade. It just didn't work. Not even close. What about this? This is a damn nice 3-bar play on CRWD today. Wide bar, narrow bar, pops up a half of an R. Guess what? Didn't matter what stop loss you used. You want to use under the bar number 2? Stopped out. You want to use under low of the day? Stopped out. Sometimes it doesn't matter. Okay? Yes, exactly right. It's exactly correct. Somebody's commenting saying, I heard it from maybe Shane Battier defending Kobe Bryant years ago, right? Where his job is to put Kobe in the least advantageous position on the court. It's like, hey, maybe Kobe prefers to go right. He doesn't like to go left. Maybe Kobe doesn't like fadeaways dropping to his left. Well, Shane Battier's point is to say, hey, I will put him in that position where statistically he has a lower percentage, lower odds of making that bucket. I did my job, but he still made the basket. Nothing you can do. You came out, you had a game plan, you followed the game plan, and the market was just better than you. That's going to happen. All right? Kobe's probably a bad example because the guy shot like 42% most of the time. Occasionally, what was his career, 44? But you get the point. The point simply, he never saw a shot he didn't like, let's be honest. But that's a different topic. Okay? So the point, though, is you come in, you have a plan, you have a pre-trade checklist. You execute the plan and the checklist, and the market will sometimes still get you. And every once in a while, the market will get you by a lot, like there was nothing at all that could have been done on BA today. It just wasn't going to work. Nothing. And then there's other times where we go back and the market gets you by, wait for it, the market gets you by a stinking penny. And you sit there and you're like, really? Are you kidding me? On the penny? Yep, I'm not kidding you. It happens. Okay? So the simple point here is, one, always be learning. You should still review these trades. As simple and straightforward as this CRWD trade looks, I'm still going to go back and I'm still going to look at the daily. I'm going to look at the market. I'm still going to review it. But I might find that I did what I came to do. I followed my rules and I executed. I just didn't get paid for it. Leave that day feeling proud and happy because you did what you were supposed to do. If you didn't, make the adjustment. But if you did, do the same thing tomorrow. And you'll probably get a different result. All right? That's part of life. It's part of trading. Good trades fail too. And guess what, guys? Sometimes you can have a really nasty streak of good trades. You heard me. I'll repeat. You can have a nasty streak of good trades. You literally go in and be like, damn, 9 of the last 10 trades I took were good. There's one I really messed up on, but 9 of them were good. None of them worked. Well, that's the way it goes. Exactly. Dust it off and get back up. Tomorrow is a new day. As long as you follow your trading plan rules, your trade management rules, your money management rules, okay, your pre-trade checklist, you do everything right. You follow your stop losses. You don't let yourself lose more than you're allowed to lose. Tomorrow's a new day. It's a new day. All right? There, 3 trades today. Go to 1R, then back to break even, right, Jordan? I mean, it's the way it goes, guys. And I know when you're new, it's hard. Why is it harder when you're new? Because you don't have years of statistics behind you to tell you it's the right thing. So you're automatically questioning yourself, going, well, I got to be doing something wrong. And if you're new, you probably are doing something wrong. But sometimes you're not. Sometimes you're doing the right thing. So track all your trades, review all your trades, and make sure you're doing the right thing. You're never going to be perfect. You will make some mistakes. I took a trade yesterday I wish I didn't take. I took a trade last week on Netties. It was one of the worst trades I've taken in quite some time. It will happen. But 90% of the trades I took last week were good, even the ones that got me by a penny. All right? So I hope for you guys this lecture was meaningful, especially in a volatile market. One last comment that I didn't make is you may find out after 3 or 4 months of, quote, good trading that you have to make an adjustment. Maybe use wider stops. Maybe wait 10 minutes. You might be looking and go, wow, that's a great 3-bar play. But for some reason over the last 3 months, the first 5 or 10 minutes of the day is not successful for me. I'm getting whipped around. So maybe you have to move up a time frame and go, okay, instead of 2-minute 3-bar plays, I'm going to use 5-minute 3-bar plays. Or instead of 2-minute pullbacks, I'm going to wait for 5-minute pullbacks. But you can't do that in a week or a month. You need more data than that. But the key here is make sure you're doing the right thing. Try to separate the result from the process. Try to separate the outcome from the process because the process is more important than the outcome. Later on, the outcome will be more important because when you have the process down, then the outcome does become important. But 1 week's not enough. All right? So again, I hope that you guys learned a little bit about good trades failing, the fact that pennies can be very, very expensive and they do matter, that consistency is everything, and you have to stay consistent. Guys, this is the type of business that you get no leeway, man. If you aren't spot on, dead on, the market will just take advantage of you in the worst ways. You have to be on point, bring your A game every day. Every day. Because we all have seen it. 1 or 2 or 3 bad days can ruin an entire month. Let's say you had 3-3R down days in a row. That's 9R. Destroyed your whole month. Can't have that. You have to be on your A game all the time. So, hope you guys learned a little bit. I am Jared Wesley of Live Traders. We'll get back at it again next week.